Welcome to ShortView Trading, it's your morning market hit for Friday, 17th of July. What matters today for traders? Well, the tech sector was once again weak yesterday, continuing its trend of the past few trading sessions, in particular since it put in its key day reversal at the start of this trading week. And with that, a number of our NASDAQ-specific short-term market timing models have continued to unwind their levels, their sell signals, and some of them are now quite close to buy. In particular, a lot of the hot money has come out of the sector, so the NASDAQ fund flows model that you can see in front of you now is moving back towards its buy level. And the index on a short-term technical scoring system is now close to oversold, and therefore close to generating a buy signal on that indicator. So the models are changing on the tech sector, and therefore our risk-reward approach is also changing. But elsewhere, the market's looking quite interesting as well because, of course, cyclicals have had a very good run for the last 3 weeks. Cyclicals, if you take an equal weighted sector approach from the S&P 500, are up about 7% in 3 weeks. And with that, a number of the broader based S&P 500 base type short-term scoring systems are moving back onto sell. So in other words, moving contrary to what you see on the tech models as that rotation has played out of tech into cyclicals and indeed some of the defensives. So with that, you can see our short-term risk appetite scoring system, for example, has just moved back onto sell once again overnight. But what's intriguing is that while cyclicals have been a strong area of the market for the last few weeks, other indicators are not confirming that cyclical strength. So for example, you'd want to see bond yields backing up in the States on the 10-year. But actually, if you look at the chart in front of you now, you can see they've been essentially sort of flat as a pancake for the last few weeks. And they're pretty much at the bottom end of that trading range since March. Added to that, Bitcoin has been a terrific leading indicator at key turning points at the S&P 500. The reason it does that, I think, is because it's a key liquidity indicator. It's the edge of speculation, so it's the edge of liquidity and therefore tends to turn first. But as you can see from the chart in front of you now, the Bitcoin's really been range bound for a couple of months and is at the bottom end of that range. So it's not confirming what you see from the cyclical parts of the S&P 500. And finally, if we look at the steepness of the US yield curve, it's really as flat as it's been in the last few weeks. So, you know, it's not steepening up. It's not consistent with that rally in cyclicals. It's not confirming that rally. For full details on how we're playing this market, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, out of Europe, we've got inflation data. That's always important. And we've got an EU leaders meeting starting today, concluding tomorrow, discussing that 750 billion euro budget that they're trying to put together. Over in the States, we've got some key data. We've got housing starts and permits. The housing is a key area of the economy that we're watching closely. Added to that, you've got some Michigan sentiment out later this afternoon in London time. So that's it from us. That's your morning market hit for Friday, 17th of July. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter and or Facebook. Simply search under ShortView Trading. Thank you for listening. Trade well.